Well, with that, let's turn the spotlight on a couple of corporate conversations. And the stock that we're focusing on is Aarti Industries. A pretty important development happened with respect to the opportunities that the company is looking at. Just a couple of days back, the European Union has decided to not renew the approval for S-Metolachlor, if I got the pronunciation of this product correctly. Now, why is this important? Because a couple of weeks ago, Aarti had indicated that there could be a big opportunity, as much as perhaps 3,000 crores, where they would supply intermediaries to this, this particular product. Now, how does this really change the scheme of things, if at all, and what is the outlook going ahead? To discuss this, we have Mr. Rajendra V Gogri, the CMD of Aarti Industries. Mr. Gogri, thank you very much for taking this call. So first, let's straight away get to this, this product where the approval has not, or the renewal approval has not come through. Can you tell us how this changes things? Because in the earlier statement that the company gave, the opportunity you saw for Aarti was as high as perhaps 3,000 crore rupees. So what now?
Yeah, actually, this S-Metolachlor permission in EU is cancelled, but EU is not a big market. Only about 6 to 8% of the total global market for S-Metolachlor is from EU. And the intermediate what we make also goes in other products. So S-Metolachlor is only about 50% of the global market for that intermediate. So overall, for our product, the demand impact will be only about 3-4% on global levels.
Okay, so
is the opportunities, you just basically you shave off about 3-4%, but you're still looking at well over, what should we say, 2,700 crores of the opportunity from this intermediary? And if yes, by when do the numbers start flowing in? When do you start, making these supplies?
Actually, we already supply them in the current financial year also. And that is going to be ramped up in FY25 when our major expansion takes place. And by FY26, we should be at the full ramp up for this product.
All right, Mr. Gogri, hi, good morning. Appreciate you joining in. Earlier when you gave this number of 3,000 crores, let's set it over the next few years. Now you're saying that, the European part that's in question is around 3-4%. So should we shave off 3-4% from that 3,000 crore mark, which would give me a number of around 2,850 to 2,900 crores? That opportunity is intact. Should we assume that?
Yeah, that opportunity definitely is intact, yes.
Okay. So, all right. So instead of 3,000, it'll be maybe 100, 150 crores lower. We got that. When you put out this announcement, you said that the deal is with a big global agrochemical company. Just want to clear the air. Is it UPL?
Yeah, that is under confidentiality, so I'm not able to comment on the specific name for that.
Okay, because the street was a little bit confused, because you had mentioned big global company, but UPL is headquartered here in India. So we just wanted that, but you're saying it's confidentiality, so we'll keep that aside.
And just
UPL is also a global company, so UPL
so is UPL the one then? So is UPL the one then, sir? Because the street believes so.
That I cannot comment on whether it is UPL, but UPL is also considered a global because they have a global operations.
Okay.
Now that they certainly are, sir. Just to go back to that number, so not 3,000 crores, but you will hopefully get about 2,900 crores. You said a ramp up will happen in FY25. How much of this 2,900 crores will you book in the current year, FY24? And how much perhaps of this total amount would you book in the next year?
So basically, will be around 50% in this year, so around 140, and 200 plus in FY25. And by, FY26, 300 plus will come.
Okay, all right.
Mr. Gogri, good morning. Prashant here. Just a quick point, sir. One of the notes, analyst notes, points out that of course, you're saying that you'll be able to realize this 3,000 crores by FY26, and of course, you've given us the hit, which could be 3-4%. But, there is also some more pointing out to past long-term, these kind of contracts which have been struck. For example, one note says that between 2017 and 2019, you actually unveiled 3 long-term contracts. There were expectations of substantial revenue contribution from each of these. But it has not yet been materialized. The initial contract, for example, they say, saw considerable overrun in capex and was later terminated. You got some compensation for that, but that was about it. So, would you like to assuage some, some of these analysts in terms of what this, what happened in the previous contracts and whether, we will see something completely different with this one? Just your thoughts, sir.
Yeah, the first one, because the customer decided not to expand their plant in Western countries, and so they didn't needed that intermediate. So that was the reason they canceled the contract, and we got almost around 750, 800 crore as a compensation for that. But second contract, once it is commissioned, it is running as per the expectation, and only the project delay was mainly because of the COVID. And same way, the third contract also, the project delays were mainly for COVID. But that contract is also commissioned, and we'll be getting the turnover from that contract as per our estimates.
The second and the third contract, sir, by when should we expect material accretion to revenues?
For which contract you're saying?
The second and the third contracts, which were struck between in that time frame that we were talking about. By when should we expect significant accretion to revenues from both those? You said the delay largely has been due to COVID.
Yeah, the second already from FY22 onwards, that is already running, and the third one was got commissioned in FY23, and this year is more of a stabilization. So third contract, will have around 50% in FY25, and then we'll be at a full ramp up for the third contract from FY26.
Okay, all right. Mr. Gogri, final question from my end before we let you go. I think earlier you were working with an EBITDA number for this year, that's FY24, of around 950 to around 1,000 crores. Do you stick by that? You could give us a brief idea on that. But more importantly, for FY25, I think earlier you were talking about close to around 1,400 crores. So by which quarter you see yourself go from that run rate of around 240, 250 crores per quarter to around that 380, 400 crores per quarter, quarter one of next fiscal year or quarter two?
Yeah, this year our guidance we have given at the Q2 result 950 to 1,000 crores. So that we are maintaining that guidance as of now. There is no issue on that. And for FY25, we had given a guidance, which is about 1,450 to 1,600 crores EBITDA. And FY25. So it will be growing over a period. So second half will be higher than the first half.
So you hit 400 crores per
FY25.
quarter when? 400 crores per quarter by quarter two of the fiscal to get to that 1,450 to 1,600 crores EBITDA?
Definitely by quarter three.
By quarter
So it will
three.
be every quarter next year we'll have a ramp up basically.
Which which brings me to my final question as well. Most of the notes, I mean, if we look at expectations for the third quarter, most of the broker notes are pointing to a sequential improvement, continued sequential improvement, even margin expansion. Given that you're looking at a better run rate in the second half, can you say that, the bottom has been made? What is the visibility on demand, ramp up of products that you can, tell us about as we get into the new fiscal?
Yeah, discretionary demand, I think virtually is recovering. So we expect FY25 to be near normal for discretionary demand. But agrochemical is molecular specific. So some agrochemical demand, I think, will get recovered by within the first half of FY25. So by first half FY25, I think more or less all the demand should be on track in next year.
Mr. Gogri, you said that just to come back to the news of EU not deciding to renew the approval for this particular herbicide, is it possible other regulators also follow their suit? Because I mean, the reason why they've not renewed the approval is because of they don't it's about safety issues essentially. So is it wouldn't other regulators take cue from someone like what's happened in Europe?
No, as per the feedback what we are getting from our customers, there are no such ongoing issues on this product in any other geography.
Okay, not yet though, as I guess we can learn. Thank you very much, Mr. Gogri. Appreciate you joining in It's a pleasure having you with us here on the program. Thanks indeed. So that's Aarti Industries with some perspective on the impact on the business. Pretty confident that maybe some recovery is underway from the first quarter of FY25.